All right, it is week 2 of the Three Kings Mentorship, and today we will be talking about the importance of a stop loss. We had a lot of questions last week that came in about the stop loss, so I'm excited to cover this with you guys today because this is one of the most important parts of risk management that we will endure as traders, right? Now, of course, everything that we talk about is not financial advice, it's for educational purposes only. So please go back and review this material, learn it, master it, understand how you could apply it to your own particular trading strategy. Some of you may have seen some of this before and experienced stop losses before. We're going to break it down on a different level today, even if you've been part of this mentorship program before. Okay. So, of course, just the basics. What is a stop loss, right? A stop loss is an order placed with the broker to buy or sell once the price of a stock reaches a certain level. Um, Also, if you guys have any questions while I'm doing this, just raise your hand and I will unmute you, okay? Uh, so, uh, the purpose of the stop loss is always to minimize your losses, protect your capital, and avoid any type of emotional decision making. Now, emotions would include, of course, FOMO and so many other things, or even FUD, fear, uncertainty, and doubt. Those are still parts of emotions, right? Now, of course, I like to always drop new things on you guys, but there's this book called Get Rich with Options that talks about different ways that you can stop out and make recommendations for your stop loss. And I wanted to point this out here, right? That you can decide to stop your loss at any time, but most traders on average like to have it 25% below their cost basis. You can see this here in the book from Get Rich with Options by Lee Lowell, right? Now, there's not really a set defined amount that you can use for stop losses. Some people like 10%. I'm one of those 10% people. So, and for some trades, I like 32%. Some I might even like 50 in dollar cost average instead of stopping, depending on the trend and the expiration date. So some traders choose to close out their stop loss at any point that benefits them. All right. So in this book, it also talks about the trader's mindset, right? Now, here in this example, it says, in simplest terms, a market maker will help facilitate the execution of a trade. It's not necessarily the market makers that we are really truly up against, right? They just provide continuous bid and ask points for the stocks that we're looking at. They are supercomputers that constantly do this and run through companies like Stifle and a few others to name, right? So we often tend to blame the market makers when a trade doesn't go in our favor. But when we understand that the role can shift the mindset, market makers aren't out here to get us. They simply provide the liquidity by facilitating the trades with the bid and ask prices that we want to see. They don't predict the market direction, but instead they aim to profit from what's called a spread, right? This is why setting a stop loss is often crucial because this spread can move very, very quickly. It protects you from any unnecessary losses without relying on market makers to work in your favor instead of blaming the system on how it works, right? So the focus that we have to do is always in refining our strategies and make sure that we're managing risk and executing more disciplined trades. All right. So losses are absolutely crucial because I have this term that I like to use called real, right? Real risk management. All right. Without a stop loss, a trader could suffer significant loss if the market moves against their position. Now, there are various forms of risk management, but we're focusing on the stop loss. Even if you are watching one stock at a time, for example, we grabbed some MicroStrategy puts. I told everybody this is going to be a slow trade. MicroStrategy is on a downtrend, but again, you might want to set a stop loss. All right. Secondly, the E in real, emotional control. Stop losses prevent traders from holding on to losing positions in hopes for a reversal. Sometimes the momentum doesn't always go in our favor, right? We may see it one way on this time frame and then a different way on another, right? So we have to make sure that we have that emotional control. In the A and L in real, the AL, avoiding larger losses. Stop losses help lock in smaller losses and protect our profits. All right. So how to set a stop loss. one common approach to setting a stop loss is at a percentage below the entry price. For example, if you buy a stock at $100, a 5% stop loss would be $95, right? So the technical aspect is setting a stop loss based on technical levels. For example, you map out your levels through average true range, or using the chessboard supported resistance, or you may decide to use Fibonacci's. You may decide to use another indicator, predictive ranges, smart money concepts, whatever it is, right? You may decide to do that and then go from there. All right, so make sure that you set your levels for what works for you. Okay. Now, let's get a little bit more in depth about how to set a stop loss. I'm going to share this with you guys. We're going to talk how to set a stop loss on Robinhood. First thing we're going to do is click sell, change it from limit order to stop limit. Okay. So here for the stop price, I may put it at $9. Okay. So that way I can walk away with a profit. For the limit price, I can put $20, right? So if it were to let's go back. Sorry, guys. You'll see, guys, how to set a stop loss. Trying to pause the video. First thing you're going to do is click sell, change it from limit order to stop limit. Okay. So here for the stop price, I may put it at $9. Okay. So that way I can walk away with a profit. For the limit price, I can put $20, right? So if it were to sell at 20, then I would just simply hit review, swipe up, and then I'd be done. Okay. All right. So, of course, you guys will have this, but I wanted you to see physically how to set the stop loss in multiple brokerages. I wish I could have paused it before it kept moving. I'll have to figure that out. So sorry about that. But you guys, I'm going to show you how to set a stop loss in Robinhood, Webull, Schwab, and Moomoo. I'm going to show you how to do it. Because of confidentiality of accounts, and I can't show you live because I don't want to show my details of my account number, all that kind of stuff for privacy purposes. So I hope that you can understand and respect that. Okay, so let's look at the Webull stop loss now. Stop loss on Webull. You'll simply hit sell to close. All right, you'll hit take profit stop loss. Okay, just like we did a few minutes ago. Our stop price would be the lower amount we would take. So what, minus 10%, minus 20%, whatever that is. And then the limit price is the max that we would want. Okay. Hit next, place order, and then you're done. Okay. So it's quite simple on Robinhood, quite simple on Webull. So if you're very new to trading, or if you have these two brokerages, make sure that you familiarize yourself with that. All right. Here we go with Moomoo. Okay. So here is the stop loss order on Moomoo. You would hit trade, okay, hit sell, all right, hit order type, hit stop limit, okay. Again, trigger price and price. We have to make sure that we put this here, all right. And then let's see, our trigger price, that would be, oh no, let's just do 4,000, so $40. Okay. And then our lowest price would be, let's just, I don't know, $23 even. Okay. That would probably trigger a lot faster. Okay. And our quantity, which is 1. Actually, we got to fix this one. This one's lower. Sorry, had them backwards. Trigger is 23. Our price is 40. This is a stop limit order. It's a little weird. I've never had to do this either here. Then we'll simply hit sell, put our code in, and go from there. All right, great. Now, let's take a look at Schwab. Okay, so the stop limit order on Schwab's a little bit more complex. What you do is under leg 1, it has to be sell to close. Okay, that one you want to put a very low ask price. All right, so I could choose this bid here. Actually, I'll go here and I could put maybe 15 cents. Okay, and then I'll hit an add leg. Okay, sell to close, net credit. I would make this one higher. Okay, this is just an example. I've never actually had to do this on Schwab, but this is kind of how it works. So this one I would make higher. Okay, and then I would hit review order. Of course, it's not going to work. Market's closed, but this is how you would set that take stop loss on Schwab. All right, great. So talking about the recommended stop loss percentages, right? For beginners, setting a stop loss around 3 to 7% is often ideal because you could always live to trade another day. I think we have a hand up by Alicia. All right, you can unmute Alicia.
Yeah, on my screen, I only saw the Moo. I didn't see the Schwab
Okay,
video.
we'll circle back right now.
Okay.
So the stop limit on Schwab's a little bit more complex. What you do is under leg one, it has to be sell to close. Okay. That one you want to put a very low ask price. All right. So I could choose this bid here. Actually, I'll go here and I could put maybe 15 cents. Okay. And then I'll hit an add leg. Okay. Sell to close. Net credit. I would make this one higher. Okay, this is just an example. I've never actually had to do this on Schwab, but this is kind of how it works. So this one I would make higher. Okay, and then I would hit review order. Of course, it's not going to work. Market's closed, but this is how you would set that take stop loss on Schwab. You get it that time, Alicia? Just thumbs up for me. Okay, so I did have to turn back on the ability for you to unmute yourself so you can do that if you missed anything. All right, moving on. Recommended stop loss percent. Like I said, 3 to 7% is ideal because you could always live to trade another day, right? So again, general recommendation, if you buy at 100, you can set your stop for $95. That's 5% below entry. You may decide you want to do 20%, 10%. So let me show you something real quick. Let's jump over to trading, not trading view. We'll go to option strat. So we'll use my screen here. And let's just say optionstrat.com. Okay. And we're going to look at the put option that I grabbed today, right? So we're going to create a put and we're going to go over to where it says long put right underneath it. And we're going to type in MicroStrategy, MSTR. All right. So I bought a 270 put on MicroStrategy expiring April the 17th. Okay. Now, down here at the bottom, I can do a graph or a table. I don't usually use the graph. I usually keep it on the table. And then I have it on contract value. I also can see profit and loss by the dollar. I can see profit and loss by the percentage. Okay. In the meantime, I'm going to do contract value. So I bought the 270 put. I'm down 20% right now on this particular play. I paid an average cost of 19.19, and it's now at 15.24. All right.
Are we
So
supposed to be seeing your screen?
uh, can you see the option strat?
No,
No,
we
So,
just see your trading view. Or it's
Trading view.
probably
yeah,
recording.
that's
Probably
what
with
I'm
the
saying,
recording.
Mark. The other Schwab, the video that we saw, it wasn't showing. I think it might be sharing the wrong screen because we couldn't
What the
see anything.
what the heck? All right, let me just stop share altogether because I got it.
yeah, I see Spy.
How are y'all seeing?
we're still seeing the screen from earlier with your chart, and when we're looking at the MSTR and stuff,
Okay, and I got it on option strat.
it actually looked like it's frozen. That might be what happened. The screen froze.
Can you see option strat now?
There you go.
All right. So let's
Yep.
back up because this is important. All right, so option strat. We're gonna create a put. Type in the symbol that you're in. MicroStrategy. Choose the strike, 270. Choose the expiration date. I went with April the 17th. Okay. Now, currently, MicroStrategy is sitting at, let's see. Let's just go pull up the chart. We'll do this as if we're actually trading it together right now. So again, this is for me and how I do things. Okay, so I'm gonna go to the 4-hour time frame, and I already have some levels mapped, but I'm just gonna get rid of um, let's get rid of all of them. Okay, I'm a I'm gonna map out my levels. Indicators. All right. Now I'm on the 4-hour time frame. Okay, so actually we'll just go to the daily just so I can have a little bit more to play with. All right. So the resistance at 287.81. I'm gonna make my support right here at 272.83. Okay. If we break out of resistance, my target to the upside is going to be 289.44. That's also going to be my stop loss. Okay. At that first target. This is resistance. Okay. All right. And this is support. Okay. I'm doing this as if I'm actually gonna execute it. I'm not gonna actually execute it, but I'm doing it as if I am. So now I'm going to the 4-hour time frame, and I'm also looking for my key level right now. So between 281 and roughly about 279 is going to be my key level. Okay. Of course, had I mapped this out when I entered it, I would have labeled, all this stuff a little differently. Now, I'm not using the top of this wick. I probably should. The second wick next to it, 281.77, which still is pretty comparable to what I was using here before it started to reverse trend. So right around 281.77 on the 4-hour. Now I'm coming to the 65-minute to see the trend. Okay, we're breaking through the resistance. So we're past my stop loss. Now I actually got to look at the next level. All right, because I'm mapping it out. If this was done beforehand, then I'd be in a better position to execute accordingly. Okay, so here we go. This is going to be an upside breakout. Or it's going to be a bounce. So I've really got to watch it there, but I should have stop loss right there at 289, right? So I'm going to go, I'm just going to use 291.79 here, and I'm going to hit this little target price, 291.79. I set that as my target. All right. So that tells me the contract value would be about $8.58. That would be a 41% loss today if it goes to that price. All right. Now, I could choose the dollar cost average there if I want to, or I can stop loss. Since we're focusing on stop loss, we're going to focus on the contract value of it being around that $8.58. Okay. So sliding back to our presentation, if I can find the share screen. Your stop loss is what you decide to set it as. So it depends on your risk tolerance, okay? As a beginner, keep those stop losses tight. All right. So there are two different types of stop losses that you can have. You have your limit order and your market order, right? So a limit order is when you buy or sell at a specific price or better, right? The advantage is that it ensures that the trade occurs at the desired price or better. The disadvantage is the order may not be executed if the price doesn't reach that level that you wanted, right? Whereas with the market order, it gives you quicker execution. So whatever the price is, it'll sell it right then, right there. Okay. But this is good for high liquidity stocks. The bad part is the price may vary slightly from what you expected due to what's called slippage, right? Slippage fees and rates that go through the brokerages, right? So, market orders, they're best for executing quick trades in a high liquid market. Short term trades are when time is critical, right? For example, if you're trying to buy or sell a large cap stock with a tight spread, like Apple or Microsoft, I'm putting them together, or even NVIDIA, right? For example. Now, when to use the limit order is best for traders who are more concerned with the price than the speed. Now, this ensures that an entry or exit at a specific price point is more flawlessly for you, right? So it allows you to buy stock when it pulls back to a key support level or sell when it hits a particular resistance level. Now, here's the stop loss strategy in summary, right? You want to determine your risk percentage. For example, like I told you, at 291, what, 67, that would have been a 30 to 40% stop loss for me on MicroStrategy. But I could, at that particular point, for me, I may decide that I want a dollar cost average because I position with time. Whereas if you were in MicroStrategy, or if I was in MicroStrategy with an earlier expiration date, I may have stopped MicroStrategy at 10% or at 15%. But because I gave myself a cushion of time, I also understand how the market moves. So you setting your stop loss is based on your point of view, not mine, not anybody else's. Now, when you use those limit orders, they're there for precision. They allow you to have control of the price at which you enter or exit a trade. So you need to make sure that you're monitoring the chart and adjust whatever you need to adjust, whether you have to reassess your stop loss levels or trade as the trade progresses and adjust them as needed. Right now, one thing I'll tell you, if you want to be extremely disciplined with trading, once that stop loss is set and your take profit is set it and forget it if you want to be disciplined. Because one bad habit that I know that I've had, and I've seen many other traders have, is they consistently go in and change their stop loss and take profit. All right. Once you set it, leave it. You could do it to expire today or good until canceled, right? Most people just do it for the day because markets can change in a heartbeat. Okay. Now, what is the average range of traders who do not set stop losses? Over 30 to 40% of traders do not use stop losses. I'm in that number because I watch one thing at a time, right? I was just down, 32% on my MicroStrategy play. It's already recovering. I had an opportunity at dollar cost average, but I'm locked in here. But I bought time because, again, I understand how that particular ticker moves. But this number that we're looking at right now, it can vary among traders, right? Because again, a lot of people don't use stop losses. Most beginners tend to not use them. Even experts don't use them because they're watching one ticker at a time. It really just depends on the trading style of the short-term day trader versus the longer-term investors, right? Many traders, particularly beginners, may skip using stop losses due to emotional reasons such as fear of taking a loss or hoping the market will turn around, right? Which could lead to even bigger losses in volatile markets. So for better risk management, it's essential to establish the habit of using a stop loss early on or knowing what percentage you're going to get out if it goes down, because it's going to help protect your account, your brokerage from having a huge loss or you basically liquidating the entire thing. Okay. So most importantly, you need to make sure that you manage risk. This is the most critical skill in trading because there must be a balance of discipline, time management, and position to effectively manage risk. This is why you should never trade zero DT options. King likes to refer to them as bad business deals. At least until you get to the point to where you can monitor the chart, you know how to execute. As a mentor, I must tell you, don't do it. Okay. So my question to you is, how will you prepare your stop losses? Risk management is extremely important, and I encourage you to keep them tight. Again, I appreciate your time. If you have any questions, the mic is now open. If you would like to, please raise your hand. I want to recognize you and thank you again for pushing through week 2, day number 4 of the Three Kings Mentorship. Any questions? Okay, you should be able to
Kind of want, yeah, I kind of want to figure out like what percentage of what number you coming up with to create that stop loss. Like what numbers you using to
Okay, who
exactly
is
do
that,
that.
Dave?
Yeah, yeah.
All right. So, Dave, to answer your question, it really just depends
Oh,
on the.
my name Anthony. I'm just on somebody else's computer right now.
Okay, let me fix that. Anthony Ford. All
Yeah, yeah, yeah.
right, let me change your name if it'll let me. I ain't gonna worry about it. I know who you are. Anyways, all right. So, Anthony, what I like to do, trying to share my screen, is I use on Robinhood. It has the simulated returns, so you can simulate the valuation. But let's just do, for example, Neil, what was that Apple put that you got in, bruh?
The Apple put is a expires April 11th. 210 is the strike price.
Okay. Apple, April 11th, 210 strike. Okay. So we're first off, we're going to look at the chart. We always want to start there. Okay. Now I'm using different things. I'm gonna put some on here just to make it faster for having some levels to play with. I'm just gonna throw predictive ranges on. Okay. Which is another indicator. I don't want to overwhelm y'all with them, but um, let's see. I'm just gonna throw all these other things off. Okay, so looking at the predictive ranges, you see these different lines. Those are just different levels. Okay, there was a selling point right here, and of course, I'm looking at the top of this wick. 218.88 is the top of Apple's wick. I'm in puts, so it's vice versa. Okay, so looking at Apple, if Apple goes to what was that 218.88, it'll break out to the upside. So I hit 218.88. Okay. So I set that target price. So now, had I paid what 211 for the contract, it goes 218.88. Now that contract is worth $1.89. So that's how I would determine the stop if that was my percentage, right? Profit loss percentage is 16%. Okay. Down here at the bottom, I can look at the profit and loss. Say if I wanted to do a 20%, okay? Um, I wish it would allow us to type the percentage in, but it only does the dollar here, which is why I do like the one on Robinhood, how you can slide left or right, okay? All right, so that's ideally what I would do. I would use, if I'm in puts, I would use the top of the wick or whatever levels I've mapped out, whether it be smart money concepts or Fibonacci's, whatever those levels are showing, right? I'm going to take this off. Whatever those levels are showing. So right here, the 0.618, for example, is 221.01 is the price. Coming back over here, let's do 221.01. Hit the little target, 221.01. Set target. That's a 30%, 36% loss. Contract value will be 145 had I just got in. So that would be the stop limit order. Okay. Stop limit order that I would have placed. So, Anthony, does that answer your question? Like, what brokers do you use, Anthony?
I use Weeble.
Okay. So on Webull, it doesn't have a simulated return. So you would need to utilize option strat to figure out what that percentage would be for you or what that price point would be for you to set your stop loss. Or you could just go old school and just do the math of, okay, what's 20% of, you know, uh, of this contract value if it's 211 and subtract 20% from it. Okay. So, but I personally I would use option strat to make it easy. I know Neil likes to say, keep it simple. Now, I don't want to insult anybody's intelligence, but the military phrase KISS method. So, just keep it simple. Go to option strat, put it in on the set target, and then it's going to tell you what the price estimate should be if it goes to that. Okay. All right, Meek.
Yes, yes. Hi. So my
Hey,
question is, when you said the good to close or good today, because I had
yes.
did a good to close one before, and I didn't know what I was doing, and it was still my stop loss was still set. I forgot what happened, and it didn't reach it, but I couldn't get out my trade or something.
Mhm.
So the good today, does the good today means that if it doesn't reach the target, the stop loss will automatically come off?
So yeah, good for the day means that
Mm-hmm.
by the time that the bell rings, if that
Mm-hmm.
order doesn't fill, then the order goes away. It's gone.
Okay.
All right.
Okay.
Good until
And,
canceled
mm-hmm.
means that is that order is going to be here today, tomorrow, the day after that, until that order is canceled.
And so I cancel it, right?
Yeah, that's right.
Okay. You
Or
got it.
until it fills.
Okay, well, two it feels okay. I got it.
Hmm. Now, I
Yep.
want to caution you on this though. Say you buy option way out of the money. Apple is running up too, by the way. So our stop loss would have triggered on Apple if I would have gotten in that with that particular play. So,
Okay.
anyways, let's just say, um, dang, I just lost my train of thought talking about Apple. What was I saying? Sorry. Anyway,
Talking about good to close.
okay. So, say for example, if I didn't have the good until canceled on or whatever, and it had a wide bid and ask spread. Okay, that means that the bid is super low, could be at like 1 cent. Okay, and the ask may be at like $4. Well, my stop loss is not going to trigger at all because 9 times out of 10, that contract is way out of the money, right? Which means that it's it has low open interest and low volume. Not a lot of people are buying, and not a lot of people are even interested in that play. So as a result, my stop loss will not trigger unless my stop limit is literally 1 cent or a few cents off from the bid, right? Not the ask. Okay, so the ask is always going to be higher, and the bid is going to be the lowest that you can sell it for. Highest you can sell is the ask. Bid is the lowest that they would take for it if you were to sell it, or even sometimes get in. Okay,
Yes, thank you.
no problem. Any more questions? Okay, Victor.
This is a little bit off the subject, but are we going to have some time to go over let's see, auto fib gauge again, just to get some more clarification on how it works?
Sure.
We don't have to do it now or anything. Just wanted to.
Now you did watch the video on the auto fib gauge, correct?
Yeah, and it seems, I think you had said when it hits the zero, that's usually when it rebounds, or you have to watch out for the rebound. But I noticed something like sometimes that zero will be on top and it'll be on bottom, and then also switch colors from red to blue. So
Trends.
trends. Okay. So I kind of wanted to get a little bit more, I
So
guess, clarification on those.
So look, peep this. It's crazy because they all change based on trends. So our one is at the top on MicroStrategy on the 65 minute. So our 1% is 100, and our zero's down here. But if it was bullish, our zero's on the top.
Bet. Okay. So red is if it has 100% at the bottom and it's on red, that means it's going to be bearish. And as soon as it hits,
you just missed the whole point.
okay, say that again.
All right. So watch. Let me just turn my lines off. Let me just get rid of everything. All we're seeing is the auto fib gauge. Okay.
Okay.
4 hour. Well, where were we? We were on the 65 minute. 65 minute, the 100 is on the top, which is also a 1. Okay. Our
Okay.
0 is on the bottom, indicating that we are in a downtrend. Okay. We're in a downtrend. Now watch this. On the weekly, okay, the weekly, our 1 is on the bottom, our 0 is on the top. Well, why is that? Because this one is in an uptrend. They flip. Support and resistance changes, trends change. Fibonacci's go inverted depending on the trend.
Yeah, that makes sense.
Yeah, it's that simple. But again, I should have pointed that out in the video. But yeah, that's what happens. That's what happens. But I mean, on the weekly, you can see MicroStrategy is in a bull flag. But intraday, 65 minute, we've been on a downtrend. We're filling a gap up. It's gonna come back down. Okay.
And then when it does, say for instance, we are in that downtrend, when it hits that 0, the blue, that normally means it's going to bounce, but it can still break through that support, correct?
Yeah, because support can continue to change.
Okay.
Look, this is 65 minute. What about the 4 hour, right? 4 hours is actually bullish.
Is that MicroStrategy?
Yeah, this is MicroStrategy. 4 hours is actually bullish. 2 hour is still bearish, but it caught support. Okay.
Yeah.
Thank you for asking the question. I'm glad I was able to point that out. All right, I see the chat here. Jermaine. That's the video isn't showing on Moo. Okay. So what I'm gonna do, the video will be uploaded in your recordings, and I'll figure out another plan to make sure y'all can see those stop loss videos. I think I have a way y'all can do it and put it in your channel. Okay. I'll talk to the team. I figure out a plan for that for specific brokerages. All right. Any other questions?
Yeah, I have a question, Mark.
What's up, Jermaine?
Okay, that's the way you do it. So, what about setting the stop losses to buy a trade or to enter a trade?
To enter a trade? So
you can do that, right?
Those wouldn't be stop losses. That
Right.
would be simply just entering a trade for a buy or sell based on the bid and the ask. Because see, a lot of times, let's say if MicroStrategy was going up right now, okay, and I put in an order at the asking price on MicroStrategy for some calls. Well, the order is less likely to fill at the asking price because that's the lowest that they'll take. There's a high probability that they want, I'm sorry, I think I said the wrong thing. They're less likely to take the order at the bid because that's the lowest they'll take. The asking price is what they want, right? Which is the most that they would take. Of course, they'll take as much of your money as they possibly can. But if you put in an order at the bid, what has to happen now is that MicroStrategy's price will have to come down for that bid to now get closer to being in between the ask or becoming the ask, because you put it in for such a low price. So that means the stock has come down for that bid to fill. Does that make sense? Now, if I was in a put, and I put an order in at the bid, then that means that the price has gone up. The price is going up, and now the bid is getting more closer to becoming an asking price. Does that help you, Jermaine?
Not at all, brother. But I'm about to read
Not
this
at all?
before.
Okay, well, let me see if I can show you something. Give me a second.
So I think, Jermaine, are you asking about how to set a limit order or just an order in general when you want to enter a trade?
Yeah, to enter the trade.
Okay, so it'll just fill for you.
Right.
Yeah, so Mark, I think what he's asking is just how to do a limit order.
Okay, give me a second.
Okay.
Oh, so that's totally different. All right.
Yeah, the stop loss is the safety net. That's the emergency button.
To take you out the trade, right?
Right. That's gonna save you. That's that emergency brake.
Yeah, give me 1 second. I'm pulling up my wife's Robinhood.
When you want to get into a trade, that's just a simple usually either a limit or market order. So then you set your price, like Mark was showing with the bid and ask, you set your price and what you want to pay for it, and then it'll fill once it gets to that price. Because remember, guys, the stock market it's an auction, right? And these products are what we're trying to buy. So it's gonna take it at whatever point uh once it gets to our price.
What did she do? Hold on, bro.
Hey Mark, quick question. On your chart, I know those are volume candles, but what type of candles are those? Are they like the Alaska or something? Or
No, they're just normal volume candles from Tradie Ticks. I really don't use any other type of candles on that
Yeah,
website.
but
I mean
sometimes
on Trading View, but I just never seen that color, so that's why I was asking.
Oh, you talking about those are the colors change. What is this thing doing? Hold on, y'all. My wife's Robinhood is going. I had to put some money in her account because she was in a margin call.
oh, okay, take your time. Yeah,
Give me a
those are
second.
probably stochastic candles that you're looking at. I can't see the chart right now, good fella.
I'll throw it on there for him.
See them
Hold on.
changing those colors. Mark and Neil both use stochastic candles.
So I don't. Now
Okay,
this one here, these are volume candles. All right. Based on the setting, they're volume candles, but on the auto fib gauge, and also I have that heat map. So let me turn this off. If I turn off my heat map here, my candle colors, they stay green and red. Okay. So my heat map will make it
okay, that
red, white, and blue. And then if I turn on my auto fib gauge, it makes them blue, pink, or purple. They
I,
automatically change. Yeah.
I thought he was referring to the stochastic candles.
Yeah.
I see.
no, that's cool. But yeah, I knew they were volume, but I see what you did when you change it to the heat map versus another setting. It
Hmm.
changes the candle colors. So got it.
Okay. So let me man, my all this stuff is getting cooked. I need to fix her stuff. Anyway, let me just go to a play.
And real quick, guys, going back to the stop loss, um, as Mark was saying, one of the things I really love to do, and he mentioned the KISS method. And for those who are not familiar with the KISS method, you'll definitely hear me talk about it tomorrow. But the acronym is keep it simple, stupid. And of course, it's not to insult anyone's intellect, but when you really think about keeping things as simple as possible when it comes to playing in an arena that you don't understand, it just only makes that much, it just only makes that much more sense, right? So going using the stop loss as an example, if you have $100 in the market and you only looking to lose or misplace 20%, right? It's really that simple, right? So instead of trying to figure out using this method or using that method or trying to trick the system to do this and to do that. If your max that you want to lose or misplace in the market is whether it's 10%, 20%, 50%, however, whatever you make that magical number, you got to make sure you stick to that number. Because what you want to do is you want to live the trade another day, right? You don't want to put all your money into the market and now you're sitting there watching the market take it all from you.
Mm-hmm.
So you got to make sure, and this is why stop losses are important. And tomorrow, when I go over some of the things I'm going to go over, you're really going to start to see why stop losses are important.
Exactly. So here's an example for that stop loss on Robinhood on my wife's account. So I would literally go to stop limit order. It'll open. Okay. Now my stop price. These are some coin swings that I have her in that are getting cooked right now. At any rate, I can do 10 cents or $10. Now that would be the stop price. I'm just throwing it out there. It's just not necessarily that I'm going to do it. And then my limit price could be what, $5. That means that once it goes up to $5, all whatever ones I'm going to do, they will automatically trigger. Right. Here's that timing for it's good for the day. That means that if it doesn't trigger, if it doesn't trigger based on the stop limit that I put in, then it cancels out by the end of the day. Now, good to cancel means that if it doesn't execute in 90 days, it's going to expire based on Robinhood's rules. Robinhood also has this thing where you can simulate returns, right? Now, here's the cool thing here. It tells you the dollar amount that you'll lose and the percentage amount you'll lose. Okay. Now, if I go over here and I go up in price, does it let me type it? I can type in. So let's say Coinbase goes to $300. Okay, it's going to give me the simulated return and how much the contract will make. Okay, this is how much profit that would be. All right, now let's say if it goes down, we're already down, but let's say Coinbase goes to $154. I lost 288 bucks. Contract value is now 13 cents, and that's a 72% loss. Way more than what we would say is an ideal stop. Okay. So, setting those limit orders is always helpful. This one, I don't know if they do market for Robinhood because market typically will execute very, very quick. Okay. Like literally whatever it is, but you end up losing more than making. All right. So just keep that in mind if you ever choose to do that.
Yeah, with Robinhood, I believe you only can set the limit for the stop loss.
Yes. Thank you, bro.
Quick question, Jermaine, is this helping you, or do you need to see an actual entry?
He needs an entry point. Well, see, I tried to. My wife has a margin call, so
I got you.
it won't.
Hello?
Go ahead, brother.
You can hear me, bro?
Yeah, I
Yep.
can hear you.
No, I think what was confusing me, man, is on Charles Schwab, right?
Mhm.
Whenever you go to the buy order, it gives you the option to do a stop. Or the stop, it gives you an option to buy. So I was trying to figure out like why is that? Like when you go to the stop order, it gives you the option to sell or buy. So that's what I
Oh,
was wondering, like
okay.
why does it, you know what I mean?
Yeah, so Schwab
So
Schwab is a little retro. Okay,
right. So
so
that's what I was asking.
so yeah,
Okay.
let me explain it. Unless King want to do it, you want to do it, King?
No, take care, bro.
Okay, so you have to choose buy to open, buy to close, sell to open, or sell to close on Schwab. You have to select it because it's a dinosaur brokerage. I thought that when they moved from TD Ameritrade to Schwab, it would become a little less complex for new users, but it's not. So you have to choose sell to close, and then you have to add a leg. Like so, right underneath that first leg is a sell to close, right? And then you have to do a second one sell to close, sell to close with a higher price. So that you have one for your stop loss, sell to close, and one for your stop limit take profit for sell to close. So you actually have to change it, but both of them got to say sell to close. Does that make
Okay.
sense?
Yeah, that makes sense. Got you.
Okay. But you see the plus sign and add leg on there?
Yeah.
Okay, that's what you have to do to put both of them there. One for the lower price, one for the higher. That way you leaving here with some Denzel voice. You know what I'm saying?
Right.
You want to leave there with something. So, any more questions about this stop loss or anything like that?
Nope, not for me. No. No, but trade station is similar. You have to actually, and I've actually entered some trades by accident in the beginning when I first started using them because you got to actually change it to buy the close, sell the close, buy the open, sell the open. So you definitely want to diversify your portfolios. I mean, not portfolios, your brokerages. Try to get something more user friendly. I got multiple. I think Mark has multiple. Neil has multiple.
Yeah.
Because different tools are going to be better for different things.
Now, do you have Thinkorswim? Do you
Me,
no
Jermaine.
Jermaine? Do you use Thinkorswim?
Yeah, I got it.
Okay, so I'm opening up Thinkorswim real quick because I hadn't done it on there. But I think the last time that I looked at Thinkorswim, it was a lot easier. Let me open it online. Thinkorswim web. Log in. I
I'm
don't.
with King. I use Trade Station, and this thing is it's a little animal.
You like TradeStation, good fella?
No, it's a little more difficult than the ones you be showing, like the Robin Hoods and the Weebles, and
Yeah,
it's a little more complex.
Trade Station got a little dinosaur in it too.
So
Oh,
this is what I'm gonna say. All right, not financial advice, but you could consider looking into an easier brokerage. And certain brokerages such as Robinhood and Webull will give you free stuff from switching stuff from one brokerage to theirs.
yep.
So I'm just gonna put that in the atmosphere for you. You could choose to do what you want to do with that. All right. So I'm trying to open my Thinkorswim, man, but it's only get opening up Schwab normally for me. I don't. Again, I really do not like using my Schwab brokerage. My Schwab brokerages, brokerage I use for penny stocks, and other over the counter pink sheet stocks that you can't buy elsewhere, and Nvidia. That's it. I don't really use it for anything else. So I keep that account almost naked. Um, but yeah, I cannot even find the Thinkorswim on there. If I could have, I'd pull it up, but it's not opening. So yeah, it's kind of screwed.
I
I
think
wanted
we
to show
had
you.
something in the chat also.
Okay, that was from Alicia.
Yep.
All right.
Yeah.
Uh-huh.
I'm sorry, I had to take a call and I missed a little bit on the stop loss conversation. I meant to say that, are you saying create a stop loss after the buy to open has been completed and
So
then create a sell to close and then create the stop loss during the sell to close?
if you want to have a stop loss set, you do your buy to open, order fill, right?
Right.
Then you click on it. Hopefully, you have $25,000 in your account or a cash only account. And then you do a STC, sell to close, one for the lower price to stop loss. And then you have to do another sell to close by adding a leg for the most money that you would take if it goes up. That's how you
Okay, you
set
had
the stop loss, stop limit order.
okay. I saw the added leg. I wasn't sure what that was for. So okay.
Yes,
That makes sense.
you have to do that if you want to take profits.
Okay.
Because again, a stop limit order is going to have a stop like a bottom, a floor, as someone would say, a floor to the house, and then you have a roof that you can't go beyond, right? We stop at the roof. That's going to be the most amount of money you could take. Your foundation, the lowest that you're willing to lose, and still walk away with something. You might have a little crawl space under there, right? And then the roof. Give me my money at the roof.
So the leg would be the highest amount
Yes.
that I want. Okay. And it'll honor the highest amount. And
If
okay.
it goes up and goes past it, then you might end up getting pissed off because it's like, oh, it's still going up. So that's the only downside about it, right? But then
Mm-hmm.
if it goes to the floor, right, or before it gets to the crawl space of the house, then you're like, well, dang, I walked away, I took a $10 loss, and it's still going down through the crawl space to the dirt. Now I can't do nothing with this, but I managed to walk away before it happened because I set that stop loss.
Understood.
Gotcha. All right. Any more questions? Okay. All right.
Well, I have a question, but it's not pertaining to what we saw.
All right, brother. Go ahead.
Alicia, are you at work?
Sort of.
Oh, okay. Well, could you just not take any calls while we're doing this? Just tell them you're not working right now.
Yeah, well, that was my tax accountant. I didn't even have an option on that one. So,
No, I'm just joking with you.
but
Funny. Funny. Okay.
thank you, King. I appreciate the
No problem. Just a little encouragement.
So I'm gonna play around here for a minute with you guys. Earlier, before we began, we were talking about a particular trade on Amazon. All right. I'm actually gonna set a stop loss on this and just play something here. All right. So first things first, I'm gonna do this as if I'm actually gonna trade it. So I want all my stuff that I like to use on my chart. Okay. Um, so I can see we're gonna start on the 4 hour time frame. All right. 4 hour time frame is showing me we got a little bit of support on the Fibonacci. All right. Also want to see what the MACD is giving me here. I'm looking at Amazon. Okay. So we got a little bit of support. I may decide I want to go ahead and draw a line here. And I'm actually going to keep my indicators on. Okay. Now it's in the demand zone. And we're crossing at 0.78 fib. All right. So I need to say, all right, well, right here around 189.41. Actually, I'll just do right at the body. We're at 188.25. So I'm going to set a line here. Okay. This is resistance, upside entry, calls. Okay. 4 hour. All right. Now, I'm actually going to turn my indicators off, go to the 65-minute time frame. Okay. Now, here, I'm not getting much data, so let me go back to the 4. Let me look at the daily. I'm looking for the next low candle here. This is on the daily. We're right at 185, which is catching some support. It looks like this is a key level here at 185.26 on the daily. Okay. Key level on daily. Amazon. 331. Okay. So I'm seeing that key level based on where it's bouncing here. And then also how it keeps testing it. Mind you, I don't have any indicators on right now. Now, also, as I'm peeping this thing out, there's a freaking gap right here at 190, 199. Why did I put that star there? All right. Now I'm actually going to flip my indicators back on for a second. And I can see right here that there's also support at the demand zone. All right. So if we break that 188.25, we might end up pushing up. My first target is going to be about 189.42 to the upside. All right. Now I'm going to turn my indicators back off. I really want to see something else downside too, because it looked like it was kind of pushing down on the shorter time frames, and we can see right here the daily's still in the downtrend too, because we got the top of the fib at 1, the bottom is at 0. All right, so let me see another downside level here. Let's get rid of these indicators for a minute. 180.53. This looks better for swinging though. Okay. Now, let's go to the 65-minute time frame. All right. So now I got a little bit more to work with because, again, I couldn't see much when I zoomed in earlier. Now I zoom back in a little bit more at 183.69. This is on the 65-minute. We'll draw a new line. I'll choose a way different color, yellow. 65-minute first target. Okay. Also see another target, 182.10. 65-minute, second target. Okay. Okay. Now I'm just literally only watching the candles here for the time being. Also, I noticed something else as I zoom back in. I want to look at a potential upside target too, right there, 186.95. Possible breakout area. All right. So I'm marking these levels based on what I'm looking, what I see on the candles that previously changed trend. And that would be this one right here, below that long wick. All right. So right here at the top of that candle. Now I'm just going to go back to today where we are. I'm doing this as a day trade. So now I'm going to look at my 15-minute, kind of watch the momentum here. We see that we're bouncing off of that key level that we mapped out. What is the 10 giving us? Same energy. 5 giving us the same energy. Still not time to enter calls. So I could set an alert here on that line to enter calls. But if I do, I'll probably need to set a stop loss as well. So let me see. Go back to the 15-minute. We'll turn our indicators back on. I'm looking at the MACD. MACD is showing me a little bit of a rebound incoming. I want to see what the 65-minute is giving us. We're still in a downtrend with a mild rebound here on Amazon. 4 hours still sinking sand. Even looking at the volume tick Rogers trick, we got marked down on the 4 hour. It's trying to push up a little bit on the 65-minute. 15 minutes showing us it wants to push up a little bit. This could be a squeeze, 10-minute pushing for a squeeze, and the 5-minute has been pushing for a nice squeeze as well. So to my it would be to my advantage more than likely to maybe grab a quick call with a short price target if I were day trading it. But ultimately what I'm seeing on the 4 hour and more is telling me it wants to come down. So I'm going to look at that 183.69 price target. All right. Now, because I want to be a little bit more risk conscious, I'm going to look at maybe grabbing something a month out from now. All right. So I do like that May 2nd date. I never chose it. It just automatically came up. All right. And just looking at the chart, I said 183.69. Bottom of the fib is 184.40. I could wait until we fall below that 185.26. Set an alert. Okay. So I could wait for that because it is bouncing. Dang. And it already triggered. So now I'm going to go look at Amazon. All right. And I'm looking at that 183.69 as my price target. Let's go back to the option chain. So they got some, they're all expensive. The 180 put is 1305, 185 is 10, the 190 is 1. Oh, those are calls. Wrong side. They're really expensive. $39, $40. I want something cheap. So I'm gonna go to options, May the 2nd. 185 put over here is telling me it's worth 870. There's the bid. There it is. $8.70. It's got a delta of 0.41. All right, a theta of $12. It's going up a little bit to 13. All right, I'm gonna grab one of these puts. I'm gonna put it on the screen. Trying to get my order to fill for 865. I'm gonna do it right at the ask so it can fill. And let me put it on the screen for you guys so you can see it. Okay, that's when I first started the order. I knew it couldn't fill for that, so I did it for the ask, and I got it to fill at the asking price. Okay. Now, I want to set a stop loss right here with 186.95. Amazon, May 2nd. All right, I bought the 185 May 2nd put. Okay. And the price that we said was 186.95. Set that as the target. That's about an 8.9% loss. Contract value would be at 806. So I'm gonna go back to my Amazon, the same play. Okay. I'll hit trade, hit sell. Let's see here. Oh, give me a second. So I'm gonna set this stop loss. I'm gonna hit trade. Then I'm gonna hit sell. Go to stop limit order. All right, this is telling me the contract value would be at $8.06 for the stop price. And of course, if I wanted an upside price, let's say if Amazon fell to that next target that I had, 183.69, then 182.10. All right, so we'll come back over to option strat. We'll type in 182.10. Set that as our target. Okay, now that contract will be worth $10.36. All right. And then now my stop limit is going to be filled. All right. I'm also screen recording it so I can put that on the screen for you and you can see how I did it. Um, and then there you have it. Hold on one second. This is the picture so you can see the stop limit. Okay. And then let me airdrop the video for you. Exact same thing we just did. Is that just the image? I don't want the image. Hold on a second. This is the one. And I will also post this one in the body of cohort 4 as a video for you so you can see it there as well. All right. It'll be at $8.06 for the stop price. And of course, if I wanted an upside price, let's say if Amazon fell to that next target that I had, 183.69, then 182.10. All right, so we'll come back over to option strap. We'll type in 182.10. Set that as our target. Okay, now that contract will be worth $10.36. All right, and then now my stop limit is going to be filled. All right, I'm also screen recording it so I can put that on the screen for you. You can see how I did it. Now I will say that when I tried to put that $8.06 in as my stop price, it said that that was a low stop price. So let's go back over here and let's try to add another one, right? Let's look at 188.25. All right, 188.25. The contract would be at 751. My stop price is too low. They told me to go higher. Let me see. Let's make it $12. It's above the current asking price. Sorry, I got it backwards. I'm tripping. So stop price and the limit price. My bad. I was tripping. $12 is the limit. I did it backwards on here, so sorry about that video. Here we go. Stop price does not satisfy the minimum. 7.52. Here's the new one. I'm sorry, guys. I did it backwards on the video. And still won't feel. And they canceled it. Okay. So here in this one, I did a $8 stop and a $12 limit order, right? Is it gonna let me send it? Did it backwards. My bad. I don't know if you guys realize this, but I have like mild dyslexia. Here we go. So here it is. My stop limit, my stop price, that's the down. The limit is if it goes up. Sorry about that, guys. And now I swipe up and then it's set and it will look like this. And I'll tell you guys, I used to hate Robinhood. I used to hate it with a passion, but they've really stepped their game up lately. Okay. So, nevertheless, that stop order is now set. All right. Do I see any hands, any questions, comments? Nobody?
Hey, on Robinhood, can you pull that play up again? Where does it show how much you paid to get in on that the green screen? I saw like a range. It was like we just showed the order.
Oh,
Yeah.
this is when I got in. I got
Okay, I see it.
865.
Okay, I see it now. The limit price. Got it.
The bid, that's the lowest that they'll take. The ask is the highest that they'll take. Most times orders will not fill at the bid unless it goes in the opposite direction.
It was one right before that. I thought it was like 1,200 or something. I was like, I thought you said
that
865, but
was
I see it now.
that was a stop limit order.
Oh yeah, that was the one I was looking at. 1,299. Got it.
And the reason why it's $12.99 is because they take out a fee per option. So now I would just be watching this play. And if it hits my stop limit, which will be at 186.95 on this play, then of course I'm gonna end up losing my let me see, 186.95. $72, which is a 8.31% stop loss on this particular trade. Okay. So at this point, I would just be watching the chart, or since I had a stop loss the stop loss in place, I don't have to watch it. I could just go and take a walk outside or something, or go fishing if I ain't got nothing else on my schedule. Okay.
I definitely highly recommend that for those who are not familiar with stop loss, and sitting here listening to how some of the brokerages you guys are using, the process isn't as simple as you may have thought it was, that you take the time to learn and understand how to set these stop losses. Because if you're trading without the stop loss, now that is going to make you have to sit in front of your computer or constantly be on your phone. And I know the majority of you are busy during these hours, during trading hours, but not having the stop loss in place, it is now going to force you to have to constantly look at the trade. And if you're not able to look at the trade, it's going to give you anxiety because you're trying to figure out whether or not you're making money, right? And so the stop loss will definitely put your mind at ease. All right, so please take the time to look at your plate, go through your brokerages, and learn how to implement those stop losses, because I'm telling you, it will change how you trade for sure. And I know sometimes you hear us say that we are the stop losses, and that's fine if you're able to sit there and physically stare at the chart and have access throughout the day. But if you do not, this is where stop losses are critical, because the last thing you want to do is get into a play and a few hours later, now that play is down 100%. Right? We are not in this game to give our money to the market. We are in it to take the money from the market. Right? And this is the stop losses will make or break that process. All right. So please take the time and learn how to set those up as accurate as possible.
Right. And the probability is that now that I have the stop loss set for Amazon, if this thing triggers right to the upside, I'm gonna walk away with a profit. Okay. It's already set, it's already done. But I also know that if it goes the opposite direction, that I'm still gonna walk away with a very small 8% loss. Very small. It's minute compared to how bad it could be if it goes the other way. But I mean, also because before I even entered the play, we went all the way back to what we talked about night two, looking at the candles that Brother Neil taught us, right? Now we have a game plan. We were able to kind of see what levels we were looking for. All right. And then we could trade based on that. As we're looking now, I'm looking at the 10-minute time frame. We still haven't hit my stop loss price. In fact, we rejected at my 10 EMA, and I'm just going to watch it come on down. And why do I know it's coming down? Well, because as we covered today, unintentionally, might I add, unintentionally, I'm glad that Vic asked, the Fibonacci's, all right, with the one at the top, we're bearish. The one at the bottom, we're bullish. So 100%, depending on where that is telling us what the trend is. If we see that 100 at the top, we're going down. We see 100 at the bottom, we're going up. Depending on the time frame, it can change. Here's that 4 hour, right? 4 hours telling us it wants to go up. Yes, Alicia.
I'm in trading view. What indicator is this that shows the 0, 23, 30?
Auto fib gauge.
Oh, okay. Object tree. Okay. Thank you.
It's the auto fib gauge. It's this one right here. One word by Techno Blooms. Screenshot that. Yes. Hold on. Is that all, Alicia?
Got it. Thank you.
All right. Perfect. All right, Victor.
When we're looking at the 1 minute, 5 minute, 10 minute, I think I've heard some, if I'm remembering this correctly, the 5 minute is usually for 5 days, 10 minutes for 10 days. Is that correct, or am I off?
That's what they say. I pretty much keep my settings on the daily. Like if I hit daily, it goes to the 1 minute on my trading view by default. But then when I start zooming out, again, it all shifts. But I always keep mine on the daily.
Okay, because I was looking at Palantir, 5 minute was showing kind of like a downtrend for that auto fib gauge, and then the 10 minutes showing an uptrend. Now, I've already placed a few trades, but I'm being very, instead of like my normal 20%, I'm going for like a 10% or a 15% just because it's like battling this 83 level. So would I just keep going back and forth between the 5 minute and the 10 minute chart?
So let me show you something. And then I think I'm gonna have to stop because I'm doing too much now. But I'm gonna show you this.
Definitely.
All right. So when you're looking at two time frames, bro, and if you're on a computer, right here next to the name of whatever your setting is, go to layout setup and split the screen. When you split the screen, put the same ticker you're looking at on the other side. You have one on a longer time frame. In this case, I'm gonna do a 15-minute on Palantir. Uh-huh. You see, it's opposite of what you just said. And then I'm gonna do a 5 minute on Palantir. I still got my auto fibs up. In fact, I'm gonna get rid of some other stuff, right? I'm gonna turn off this logarithmic regression channel. I got my EMAs and my Fibonacci's. That's it. So peep this. The 5 minute here is showing us that, hey, we got a little uptrend, but we rejected at 83.11, which happens to be right at the 200 EMA. Well, on the 15 minute, we got a downtrend. That same rejection is going to push it right on back down. But if you're day trading, I highly recommend 4 hour to kind of see what's going on. Then go to your 65 minute for the actual trend, showing me an actual downtrend. And then there we are, 15 minute, 10 minute, anywhere in there. You can keep your 5 minute on, but for me, between that 10 and 15, that's kind of where I want to be. Look, even going back to my original signal, MicroStrategy, okay? Now, for me, I'm set up to maybe even swing trade this. All right, so MicroStrategy, I'm using the same approach. It's slow, as they would say in church. It's tight, but it's right, right? We got the fib up here. The 100 is at the top. We reject it on the 15. It's coming back down. Mark and dollar cost average right now. Okay. 65-minute confirming, still downtrend. Remember, the 65-minute shows you the trend. And that's all I'm going to say about that because that is my time.
Appreciate that.
Yep. How do I stop? Where's my, bro? I can never find this freaking trading view thing. All right. So, are there any more questions about stop losses? I'm going to go ahead and stop the recording.